In this lesson, we're going to talk about setting the right expectations for your day trading journey. It's important to understand that day trading isn't a guaranteed way to become successful and to make money every single day. I'm telling you right now, as an experienced trader myself, there will be ups and there will be downs, but actually having the right mindset will help you navigate both and make you a more successful trader than having a good strategy. If you want to learn more about the actual mindset you need to have, please check out our fourth module, Mindset. With that being said, let's get right into it. You won't be making money every single day, and that's completely fine. That's actually very, very normal. Not every single day will be profitable. There'll be some days where you make money, other days where you won't. But that doesn't necessarily mean that you're doing something wrong. You could have the best strategy in the world, but you won't make money every single day. Do you think banks, institutionals, when they were starting out, they made money every single day before they had millions and billions of dollars where they could just hold positions and do whatever they wanted? No, they didn't. Actually, to this day, there are still banks and institutionals that lose a lot of money. Just look at what happened to GameStop. If you accept that you won't be making money every single day and you become okay with that, that's actually going to help you stay grounded and stay focused and keep going. Day trading has so many variables that impact the market, and they won't all favor you every single day. Think about how many people are actually in the market day to day. How many people, how many bots, how many different variables, things that need to happen that happen every single day. And you think every single one of them will always be favoring you daily. Once you start thinking of it like that, you start to become okay with it. And remember, losses are a part of the process. Everybody loses. Everybody will lose. It's just like winning. If you stay level-headed and you don't get discouraged, that's what's going to help you become successful. Because again, you will not be making money every single day. Nobody makes money every single day. The thing you need to take away from this specific slide is that you need to have a clear mind. Stick to your trading plan because sometimes it's not just you, it's everybody else. You won't be making money every single day. Take a look at this next picture. Here you see the actual one of Quantico Cap strategies. Here you can see that we actually start off losing a lot of money right here, and then we lose money again, and then we lose money again. We're in the negative a lot of the times. And you can see how there's ups and downs and ups and downs, and it's bumpy. It's really very like spiky. The ups are us making money. The downs are us losing money. You can see that almost every single day we win and we lose. Losing is a part of it, and you have to be okay with that. There will be days where you end negative. There will be days where you lose a lot more than you won and you end off in the red. Losses are inevitable. Losing is inevitable. You will always, always lose, just like you will always win. Even for the best traders. The best traders in the world that I know, that I've spoken to, that I've had calls with, they still lose day in and day out. But what's important is that they don't let the losses affect them. They learn from their losses. They always adjusting, they're always learning, they're always doing something more to actually help them win more and more. Success from trading only comes from persistence and always learning. You always have to be learning, have to be adjusting, and you always have to be persistent to keep going, to not quit. Every single great strategy, every single indicator, every single bank, institutional, every single great trader that has ever made money consistently will tell you it comes from thousands and thousands and thousands of repeated attempts of trying to make a good strategy and it's failing. And you try again and you try again and you try and try and try again until you get the perfect one. It's always the small little adjustments that sometimes take years of adjusting that help you make a good strategy. What you need to take away from this is that losing today, losing right now is not a bad thing. It just means that you have something more to learn and something to adjust in your strategy. All you have to do is do that. There is spread. There will always be spread. Let's understand the concept of spread. I kind of briefly touched upon it in the last lesson, but let's see. Spread affects profits and losses, sometimes from the better or worse. Just like I was saying, if the market price is $1 and the bid is 99 and the ask is $1.01, and it's always changing. So if somebody buys it, that means it goes up. If somebody sells it, it goes down. And it's like that. It's always, always changing. The market, sometimes when it's super volatile, when it's moving in those huge candlesticks, there will be spread, especially during news. When there's news and you try to buy in the middle of the news. Sometimes if you buy and the news is going down, your buy is going to be all the way down there. And if it's selling, it's going to be all the way down there because there's so many people buying and selling. By the time you click on the sell button, it's already changed. The market has already moved. So that's really what spread is. Spread, again, the definition is the difference between the price when you press the button to enter or exit a trade than the actual price when the trade is executed. That's as simple as I can make it. Let me give you another example. So let's say you're in a buy and you want to exit at a break-even point at 18,800. And as soon as you press it, when it hits it, the market moves a little bit more and it actually executes at 18,795. That's spread. That results in you losing. That's a negative spread. You don't want that. If anything, you want a positive spread because if you were selling and that happened, you would actually gain a lot more. There's a lot of factors that actually determine spread, like your broker. Different types of brokers have different types of speeds. Your internet speed actually plays a really big role because if you're lagging when you're playing video games, you're probably going to lag when you're trading. Market volatility, just like I was saying, if you have the small little candlesticks, there's not going to be that much spread because there's nobody in the market. But if you have the huge candlesticks each minute, it's 100 points, then there is obviously going to be spread and slippage because of that volatility. And there's so many more other factors that go into it. The key takeaway here is always be mindful of the spread. Always be mindful of the volatility of the market. So there are good patches and there are rough patches, just like with anything that matters in this life. Trading does have its ups and downs. So what are good patches? Good patches are when your strategies are working without any flaw, when the market is aligning with everything you say, the profits come rolling in. And the bad patches are when the strategies need adjustment, when the market is super unpredictable. It's not working in that structured market sense that we know, and the losses keep coming in. What you need to do is keep going, and I talk more about that later. Be consistent and do not give up during the tough times. Let me tell you why. Going back to that picture that I showed you, what would happen if you quit right here? You see that? It's literally negative. You just went from being positive to being negative. Now you've hit a rough patch. Ah, man, I don't think this trading thing is for me anymore. What happened the next couple trades after that? It just blew up. You went from making $0 to a lot of dollars. And that's what I'm saying. You shouldn't quit through a rough patch because there's always going to be rough patches. Even when you look even further past here, take a look at this one. This right here is a rough patch. You see that? You just went from being up to going down and then going right back up again even more. But it takes time. It takes consistency. It takes persistence. You cannot quit during a rough patch because you never know when it's going to be a good patch again. You never know how good that patch is going to be. Also, when you start trading, you might start off during a rough patch. You might start off already losing $1,000 the next day. But that doesn't mean you should quit because when there's a rough patch, right after there's always a good patch. So keep going. Again, do not quit during a rough patch. Rough patches are challenging, but persistence is key. The market will turn. Quitting is never, ever the answer. You can never quit on what you start because that makes you a quitter. You have to keep going. You want to be a winner. You want to be successful. You cannot go. When the going gets tough, the tough get going. That means they start going even more and more and more. Many, if not most day traders lose money every single day. And yet they still keep going. Why? Because they know if they keep going, there's going to be a good patch. They know if as soon as they can perfect that strategy, they will be making the most money they've ever seen in their lives. And I know you want the same thing. You cannot quit during a rough patch. And again, Quantico Cap now provides you with the best tools and strategies for you. All you need to do is hold out and keep going. Keep putting trust in the trading plan, in the indicators, in the live room, in everything we offer you for you to keep going and to become successful. Next up is long-term strategy. Quantico Cap is designed for long-term success. There is no make money fast scheme. There's no magic button that you can press that you will become a millionaire overnight. You have to stick with the plan, follow the plan, and trust the process. You have to keep going. You want to make money over the long term, not just the short term. You have to focus on the long-term benefits and not the short-term losses. Just because you're losing today doesn't mean you're going to lose tomorrow. What if the next good patch is one that explodes? It keeps going and going and going. You never know. So you cannot quit. That's why it's a long-term strategy. Quantico Cap is designed. It's perfectly crafted for you to make money in the long run. You just have to stick with it. Remember, you have to commit, be patient, so you can achieve your goals. And let me show you another picture. This right here is a different picture. Right here, you can see that we actually went negative. We went negative again, and then we started making money. Let me show you something that not a lot of people see. Do you know what number that is? That right there, that number says 10,500. It took 10,500 trades over a year for Quantico Cap to make around $200,000 using this one strategy. You can see there's so many rough patches. There's a lot of good patches, but there's a lot of rough patches as well. You have to keep going. If you don't reach that 10,000 to trade, if you don't keep going for that full year, you'll never know what your strategy, what you are able to accomplish using Quantico Cap. You have to keep going. Persistence is key. There will be losses along the way, but in the future, there are huge winnings awaiting. And if you decide to buy the Quantico Cap bot, you have to learn to trade yourself. Even if you don't, you have to learn how to trade yourself. You cannot rely on 100% other people. I don't know about you, but me personally, even though I put 100% of my faith into Quantico Cap, I always want to make sure me personally, I'm always learning, I'm always reading, I'm always getting up to date with the trades, always making sure I know what's going on, because I don't want to put all of my financial responsibility onto somebody else. That's my duty. That's my burden. That's my responsibility. And I want to make sure I'm learning how to trade myself. So while the Quantico Cap bot is helpful, you have to be self-reliant. You have to develop your skills. You have to understand the market so you can make those informed decisions about how to trade. Remember, we give you the trades. We help you trade. We give you the indicators, the trading plan, everything, but you are the one pressing the button. And even if you're not, even if it's the bot, you have to be there to make sure it's not doing anything wrong. The bot does assist you, but true success comes from your own knowledge and your intuition. Market conditions change, so you have to be able to adapt. The key takeaway here is you have to invest time and effort into learning, practicing, understanding, reading, so you can gain confidence, become independent in trading, and use the Quantico Cap system to make you want to make you rich. You don't want the Quantico Cap system to make you rich. In fact, I want to share a very important story, especially if you're going to use the bot, that I think will help a lot of people. So in 2012, the Knight Capital Group experienced a major glitch because of one of its bots. And that bot actually just started to trade over and over and over again. It was supposed to be a new software update, but it just didn't work out. This mistake caused the entire system to rapidly execute massive numbers of trades across multiple stocks. Within just 45 minutes of someone not paying attention to that bot, not being there to make sure it's doing what it's supposed to do, the Knight Capital Group lost around $440 million in 45 minutes. That loss was so severe that it literally bankrupted the company. Its stock price went to zero, and it was forced to basically use all of its funding just to stay afloat. What I'm trying to say is you have to be there. You have to look at the screen. You have to learn how to trade yourself, or else these mistakes can happen, and they will happen. Let's move on. Trading is hard. Trading might be the hardest thing to do on this entire planet, but you need a plan. When you have a plan, you begin to understand, and it starts to get easy. Nobody trades without a plan. If you trade without a plan, you're basically begging to lose all of your money. So the Quantico Cap plan, you have to read, understand the plan, and use the indicators to see what direction it's actually going. Use the signals in the beginning. We actually do offer buy and sell signals just to help you get started. Trading is the hardest market in the world. It's one of the few markets that actually doesn't produce anything. All it does is take money from somebody that's unprepared and undisciplined and move it into somebody else's hand. Remember, stock market doesn't move anything. When you're buying and selling, you're buying and selling from somebody else. You don't actually make money. It's not like you're making a product and then selling it. Money goes from the unprepared, the undisciplined, into the prepared and disciplined's hands. Remember, you will be fighting for your place in the market against the smartest people in the world. Not only are they smarter than you, but they're just basically better than you in every single way. They have more money than you. They have better bots. They have better software. They have better brokers. They have better everything. So the only thing you can control, the one thing you can work at and be better than them is your self-discipline and your control. That's the key. Expecting to make millions of dollars super fast is expecting that not only will you be perfect and better than everybody else in the entire market all over the world, which are the smartest people in the world, but that also all of the markets, all of its variables will listen to you specifically every single time. Do you understand how crazy that sounds? That's why we say you cannot expect to make money fast. You have to put in the time and effort. Trading is the hardest thing to do in this entire world. But when you have a plan, it becomes easy. Here's the things you need to understand. If you follow the daily trading plan, if you learn how to read the indicators, if you have the discipline and you trade according to the plan, if you have the self-control to not overtrade, to take your profits, and if you have the emotional intelligence and self-control to take the stops, then and only then will you expect to become a successful trader.